Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. I got an exciting show planned for today. This will be the first time that we take a look at some forex markets, and there's good reason for that. We've got some very significant action that has just recently been occurring, and yesterday in the chat somebody asked me to look at USD JPY, the Japanese yen against the US dollar, and I'm glad they asked me to do so because it caused me to pull up some forex charts for the first time in a little while, and it was a very timely time to do so. So I will be very excited to go over some of these major patterns in the biggest forex pairs, and then outside of that I'm excited to go over the action in gold and Bitcoin and Ethereum as well. So I appreciate everybody for tuning in, and I just wanted to check out the chat and say hello to everyone. And I will be going ahead and jumping into the screen share. I see Fabric King in the chat. How's it going? I hope you're having a good day. Somebody checking in from Scotland, Stephen Rutherford, talking about playing some golf in Scotland. Now that would be a dream of mine. That's definitely a bucket list item. That's for darn sure, playing golf in the home of golf, basically, at St. Andrews or any of the courses that they play. The British Open is definitely something that I would be very, very interested in doing. So get at me if you can make that happen. Okay, so we will start with Bitcoin. And we do just have a couple things we could talk about. First, we can go ahead and put this horizontal back in place. And we do see that it tried to break above this horizontal at 83.34, but it was on a 9 on the 4-hour chart when it was doing that. When we see a 1 with that red arrow below, at least if you're using Tone's version of the TD sequential, that arrow illustrates a red 1 that was at a time a green 9. So when this was up here trying to break out of that horizontal resistance, it was knocking its head into that 50 EMA, and it was on a red 9. A green 9 that now has turned into a red 1 and closed as a red 1, and now we've got a red 2. So we'll be watching to see if that can break below the 1. If we do revisit the bottom of this range, which is what would be the most likely way to move forward from here, is coming on down to revisit that 77.60 or so. That when we're stuck in a range and we fail to break out of the top, then I expect it to return to the bottom. And if we do return to the bottom, I would be expecting us to go ahead and break that down due to the major closes that just occurred. And if it really, continues to reject the 8,400 level, then more move to the downside sure makes sense. So there isn't a whole lot to go over with Bitcoin as far as I'm concerned. Like I mentioned yesterday, sometimes you just have to sit and wait. There's no signals here. I guess if you are trading the depending on what you're going at, the two systems I use are referred to as MSR and the Sawcruhteez, and the Sawcruhteez wouldn't signal a short entry until this thing broke, and this wouldn't be an attractive entry. That's a trend trading strategy, and this is in a range right now. So if you're using a trend trading strategy, you're probably going to end up selling the bottom and buying at the tops. Like here was the long signal right around here, very close to the top of this range. And now if we come down and break down this guy, it would be very close to the bottom of the range. So that's where I like to refer to other methods when the price is stuck in a range. And one thing we haven't really looked at much at all is the stochastic. I think that that's a really good tool for when price is stuck in a range. And this is a good illustration. Wow, I hadn't looked at this yet, but sure enough. So if you are able to successfully identify that this thing was ranging, back in here, then this gave you a buy signal right at the bottom and sell signal right at the top. So when the market is really trending, the stochastic kind of becomes worthless. Notice how it's just, really not helpful at all when the market's trending. It'll just cross, recross. Sometimes it'll just get stuck above or below the areas. But when you are in a range, like we were back up in here, let's see if I can make this a little bit more visually pleasing. Okay, there we go. So here we were, stuck in a sideways range, and notice how these signals, aren't going to always be perfect, and you are going to have some weird areas like this, but this is definitely one of my favorite tools when the market is stuck in a range. It will be, generally doing well at getting crosses down around support, buy signals around support and sell signals around resistance. That was sure a nice one there, right at support, and then maybe you exit and get right back in depending on how you like to trade. So this is something that I will definitely be kind of keeping an eye on. Would be interesting to see if this does recross up here. That might make me think that we are ready to break through the top. I'm not feeling that way as it stands. I do think that the resistance from the 50 EMA is quite formidable, and that is the reversion to the mean that we've been waiting for when we really sold off and got deeply oversold, or at least very far away from the mean in terms of distance from moving average. We were waiting for price to return to these moving averages either through a bounce or sideways action. So being that we've returned there and resisted, it sure seems to me like now we've reverted to the mean and we're ready to continue down. That's what I'm seeing. How am I positioned? I did, let's just stick with this chart here. Get filled on, well, not, I got a partial fill on ETH short, and we talked about this yesterday. Cross occurs with price too far below, so we wait for a throwback to the first retest of the 200 EMA. I didn't quite get there, but I did have orders layered, and that's kind of my biggest order was right here, about 187.50, I believe, and then I had two other orders that were slightly below, and that was due to some horizontal. This 183 was a very important level that I was looking at as an area to go ahead and sell. So that was the first order that I had was 183, and then I had 185. 185 that got me in very close to the top of this guy, but only about, I will say, maybe 40% of the position was filled that I wanted because I had another order waiting up here. So as it stands, I'm already looking to trim and hopeful. Now I've got an order for, even though I didn't get fully filled, I still want to trim if this moves in my favor like it is. So I've got an order set at 170.5, which is this kind of horizontal and the bottom of this trend line. So about 20% of the position that was filled, I will be exiting if we can get down to 170.5. And the main reason why I love doing that is because it should basically give me a free roll. If I lock in some profit right here and then the market does continue to the upside and gets a golden cross, well, that realized profit should, in general, I expect it to make up for any loss that I would have to take. If we do come down here and I get filled and then we take off up to like 200 or so, I would then be exiting on the golden cross, and I would expect the profit down here to roughly account for where I would be getting out if I did have to get stopped out. So that's something that is very, very important, is to be taking a little bit of profit when the market moves in your favor, and then allowing the rest of the position to continue trending for as long as you can. Basically, these moving averages we see can stay crossed for a very long time, and that's where you want to. That's what you're hoping for, is to get in before one of these big moves. And if you don't, but you basically lose very little or nothing at all due to trimming, then you find yourself in a very, very profitable position in the long term. If you're running 1,000 times, eventually you're going to get some of these big moves, and as long as you are really diligently protecting your risk when that doesn't happen, then you're going to make a good amount of money from trading. So that's pretty much how that goes, and that position got partially filled, and partial fills are pretty darn awesome because that means you got in very close to the top or bottom. If you only got partially filled, that's a pretty sweet situation to be in, because that means the market basically started moving in your favor right away, which is kind of what happened. And I did talk about potentially longing ETH BTC as a position that I would expect to be profitable in and of itself, and also a nice hedge for any ETH USD shorts. And I didn't do that, and I explained yesterday why. It ended up working out pretty darn sweet, where I was looking at where do you draw this neckline. Maybe you could say, so I'm looking at this as an inverse head and shoulders. Let me make sure that that's clear. Get these guys out. So head, shoulder, nope. So that was kind of the question, is this looks like a real nice bullish continuation pattern to me, whether you want to call it a cup and handle or inverse head and shoulders. The question was, where does this thing get confirmed? We've got this shoulder here, this shoulder here. It very much looked like the neckline could be right here. Then I was looking at right here as the price was kind of fighting to get through that horizontal there. And yesterday's show, I was looking at this and saying that I think this is probably where you draw the neckline, but if it's me, I want to see a break above this guy, just because it's so, it's very close to this price here, and it would be very important for me to get that extra little bit of confirmation when it doesn't cost me much in terms of the price that I'd be getting. So yesterday I mentioned that if we broke above that, that's where I would consider the entry to be, even though the neckline is much more visually appealing, drawn at probably like this. But when when we've got this inverse head and shoulders, we don't really want any price action to the left and above it. And that's definitely debatable, but that's how I feel, where if you've got like a cup and handle continuation pattern or a inverse head and shoulders, you want that, you kind of want this top over here to be the left shoulder. So this still could definitely work out, and just because we kind of got this fake out move right here doesn't mean that it's all over. And what I'd be looking at right now is some sort of parallel channel. Let me get this guy out of here. Yeah, there's a couple ways that this could be kind of drawn in. I like it like this. So yeah, that I thought was, for whatever reason, my mind thought that bottom trend line would still be intact. It doesn't look like it is, so therefore I would definitely be viewing this as a trap and saying that this pattern is probably going to be invalidated. I guess the reason why I wasn't ready to say that is because we still could be working on a higher low. This did, make a higher high above this, and we've got higher lows all the way up here, and right here it would be, definitely a higher low than this. So if we do take out 0.02, that would give us a lower low, and I'd say that this thing is ready to head back down. And I am very interested in any sell signals that come through. So here we do notice that it would be, it definitely, I wouldn't be entering a short if we broke down 0.02 because of the bullish EMAs. I would wait for some sort of crossover, and therefore I wouldn't be expecting any signal to come through too soon. But sometimes that's can be a good thing to let the market develop, and then just patiently wait for your signal. And that's definitely something that I will be doing here. And let's see, there's maybe another trend line we can draw in there. So definitely we'll be keeping my eye on that guy. And yeah, that would be interesting if we tried to confirm this pattern. We break down this, create a lower low below this, but there would be a lot of support. There should be a lot of support at 0.02 down to 0.0198. That should be a significant area of support. And if it breaks that down, I should hopefully have plenty of time to get into a position. And as it stands, I will focus on managing the ETH USD position. So let's go on to gold. So yesterday we were looking at a bounce up and into this area of support, prior support, that looks like it's ready to become resistance, and then a death cross that's coming in. I did mention that I would be interested in selling that area, and unfortunately I didn't get in on that guy there. There's a couple of reasons that are there's a couple of reasons. Mainly I'm more interested in shorting silver than gold, because of, again, a number of reasons, but number one is when long the strongest, gold is the strongest. When short the weakest, silver being the weakest. And then also silver still doesn't have a golden cross on the 50 and 200 week EMAs, and gold does. So there's a lot. Silver is in a lot more danger of breaking down in a significant way than gold is, as far as I'm concerned. And we looked yesterday at the gold to silver ratio, and seeing that gold to silver ratio is making new all-time highs, and potentially there was a little bit of a correction there, but now it kind of looks maybe ready to go back up. If gold's beating silver, then, and I'm wanting to short, shorting silver makes a whole lot of sense. And if I can get into a silver short at these prices, that'll go a long way to work as a bit of a hedge on buying a dip on gold, because that's what I'm really wanting to do here. Need some water. If I can, if price does dip from here and comes down to where I'm wanting to buy, and I'm have a profitable short on silver at the time, that makes it that allows me to be a lot more aggressive, and with the exposure that I long gold on. And I'm very interested in being pretty aggressive on buying this pullback here, and we will get into why right now. So I'm not sure. Yep, Fiboswani is in the chat, and this is his chart, so I really appreciate him sharing his Elliott Wave count. Yesterday I was asking, and he pretty quickly got back to me with this beautiful chart here, and he did mention that he would be happy to answer some questions in the chat. So if you guys have any questions, then shoot them his way. We got a pretty good question that I'll have to take here. ETH $30 possible? Abso-freaking-lutely. So let me go back to the ETH chart here real quick before we get in, because that's something that I have been looking at close and probably haven't been. Let's see. Wow, look at that wick on Poloniex. Okay, I want to just pull up a long-term chart to show real quickly why I think ETH to 10 is rather possible. It'll take some time to get there, but I'm pretty darn certain it's going to get there. That's really that last major zone. If we do come back and revisit double digits, which I'm expecting before the end of the year, down to under 100, then the next area of horizontal support, there's a little bit at 50, but really we would be looking at down around $10 to $20 would be where the real next level of support would be found. So definitely think that ETH to 30 in the next couple years is quite realistic and reasonable, and look at a potential death cross coming in. So keep an eye on that. All right, back to gold. Okay, so yeah, this definitely is a shortable opportunity as far as I'm concerned. We are close enough to the EMA crossover, and this support does appear to be turning into resistance. So this definitely is an opportunity, but I'm not convinced it's the best opportunity. And wanted to talk about this chart here. Yesterday I was looking at potential for, like, what I was seeing is this tiny little guy right here being 1, 2, 3, 4, 5, and I definitely am always deferring to somebody like Fiboswani for these Elliott Wave counts, because there's something that my mind trusts and believes in, because I've seen so many times 5 count followed by an ABC correction, but I haven't taken the time to really delve deep into how they all work, because they are very complicated, and there's just so many things out there that sometimes you have to just stick with what works for you, and then potentially have experts of different categories to refer to. And Fibo is definitely one of my favorite guys for Elliott Waves, and then also he does a great job with patterns and retracements. So here he's seeing this as the third wave and looking for a return to the 0.618 at 1379, right where I'm wanting to buy big. That would be where prior resistance here would be likely to become support in my mind, and without even realizing that was the 6.18 retracement level, it is definitely good to see that confirmation. And I really like how this is drawn up due to how nicely it matches with the Livermore accumulation cylinder that we were looking at yesterday. I mean, it is just absolutely, I mean, that if this plays out like that, that will be the cylinder with a widening mouth. That's what it is, where it's the widening bottom widens and then the top widens. And if we were to get this 5, let's see here, 3, 4, 5, and then it looks like there's a larger count for the circled ones would be, and this is where I don't know if this would be the super cycle or what the proper terminology is, but we see like a 1, 2, 3, 4, 5, and then inside of that a 1, 2, 3, 4, 5, and then this right here, this 5, that it's the move down here would be likely an ABC correction coming off of this 5. So you'd have this smaller 5 count to the upside and then a potential ABC down to revisit this 1380 area or so, and then it would be postured to take off on the the 5 on the larger scale. And if that was to happen, let's just count how many. What we'd have 1, 2, 3, 4, 5, 6, 7. Okay, is the count. Now let's go to our accumulation cylinder. 1, 2, 3, 4, 5, 6, 7. Whew. I guess this one ends with the 7th on the bottom, and ours ends with the 7th on the top. But that is a very, very small difference. And let's just see if we can get a little bit better look at that. Okay, here we go. So this is a very, very bullish, pattern. If we can get this sort of, accumulation cylinder with the widening mouth, what that is like every time we make a new high, it's that leg is bigger than the last. Like here we have a kind of a small one, then a bigger one, and then a bigger one, and then a real sort of explosion. This is where the parabolic move would start. So from what Fibbo's chart is drawn up as, it looks to me like we are right here on point number 4 of this accumulation cylinder, and in a good shape to pull back to that bottom trend line before having another bigger move. Maybe that'd be like an extended 5th wave, and that's again some terminology that I'm not exactly sure if I'm using that correctly, but the idea is what makes sense in my mind, where you have this is the opposite of like an exhausted move, where an exhausted move the moves get smaller and smaller. When you have these moves that get bigger and bigger, then you are in a very, very bullish setup. And then notice how this also has volume drawn in for each point, and it shows that like here at 1 to 2 it's plus, it's big volume, increasing volume, 2 to 3 decreasing volume. So as price goes up, you get a lot of volume, and then as price comes down, it comes down on decreasing volume, up on increasing volume, down on decreasing, up on increasing, down on decreasing. So let's just go ahead and take a look at the volume. Okay, we will pull it back to the weekly. Okay, and what happened to the volume? It was shown on a lower time frame. It's not going to show us on the weekly. That's a bummer. Okay, so let's try GLD. Okay, interesting. Hopefully you guys can see that. Let's make it a little bit darker. Okay, so notice how down in here the green volume is significantly higher than all the red volume. So going up, and volume is going up. The buy volume is increasing, and then we have this pullback here, and the volume decreases. And then we go up on increasing volume. As the price goes up, volume is going up, and it's green volume, a lot of buying. And now as price is starting to pull back, we're already seeing the volume pull back as well. So I'm really liking the idea of, you know, taking out a significant position right in this area. Specifically, if I can find myself in a short position on silver that's doing well, because then if this long goes against me, I would sure be pretty darn confident that the silver short would be moving in my favor in a big way. So I haven't entered that position yet. Let's go ahead and take a look real quickly. Man, I'm cruising right through. Only 30 minutes in, and we've already gotten through a lot of charts. Maybe I am getting a little quicker. Okay. So this is just now coming in, and I'm wanting to be kind of patient for a couple reasons. First would be, well, there's, like I said, a couple. This definitely looks like an area that could provide a pretty, significant bounce. In my eyes, we are stuck in this bearish channel, and I do think there are going to be better prices to sell this thing at, even though we're getting a death cross right now and we are bouncing into it. It still seems to me like there's some room left to go. So right here is where I would be interested in starting to build a position. If we can get up to about 17.5, that would be a pretty darn interesting spot. We've also got this guy that's could be, let's see here. It's definitely not in the middle, but it is important. It makes me want to see if I can draw another one on top. Yeah. Okay, so yeah, here I'm not quite wanting to enter yet, and this is where having a little bit of patience, in my opinion, tends to pay off. I mean, if this thing just turns around and reverses and I don't get into a position, so be it. But if I start entering a little too early, now that's it's really hurting my risk reward in a big way. So I really want to enter when it's a lot as close as possible to these moving averages, because that means if they recross, my risk is going to be a lot less significant than if I'm entering when we're, a little bit further away. So seeing that we've got that horizontal that gold has already gotten up to and retested, and these moving averages turning, getting a death cross right at that horizontal, and also this kind of trend line right here, which definitely appears to be a significant area. I'm interested in 17.5, but 17.25 isn't quite as appealing. Another reason is we just had a long string of bearish SARs that got broken. That tells me that we're definitely in a good position to continue to the upside. And that is basically what I'm seeing on gold and silver. So now let's look at some forex charts. So I've been keeping my eye on this channel for a while now. It started to develop basically before I was born, so this is definitely something that has been in place for a very, very long time, where the euro has been quite bullish against the US dollar. And this is a 3-month chart of euro USD. And what we see is that now we are testing the bottom of this parallel channel. And not only are we testing, we actually just had a quarterly close below it. However, notice what has happened in the past when we get a quarterly close above or below this channel. Right here, we closed below and immediately got a reaction to the upside on the magnitude of like close to 20%. That the euro increased value against the USD after a 3-month close below this channel. Let's look back here. 3-month close above the channel leads to a huge move to the downside. I'm going to need to measure that. 41% lost value immediately after. Notice how this is immediately after the close. You get one close and then an immediate reaction. One close, immediate reaction. One close, not nearly as big of a reaction, but it's immediate. And look at that engulfing candle that in 1 quarter lost like 15–20% of value. So yeah, this is something that I'm watching close. It's still, if we get another red 3-month candle, like if this thing breaks down, then I would expect for sure the US dollar to become the more valuable currency. And there are a lot of things going on in Europe and the and a lot and I haven't read up nearly as much as I could, but I know that there is definitely a lot of reasons why this euro could be in a position to really lose significant value based on technicals and fundamentals. So if we don't get an immediate reaction, basically if we just get another red candle that takes out if we close below this low specifically, then I would say this thing is done, and my targets would be 87 cents for the euro versus the USD, and then I would really expect us to come this to come all the way back down to about 60 cents. And I would expect what's interesting me right now is how we are forming a bear channel, and this didn't happen in the past. Okay, so back in here, you know, you could draw in a channel for sure, but it doesn't look near as significant as this one right here. So it's still in a position where historically a close above or below this channel has led to a huge reaction to the upside, but I'm not feeling, I do feel like this is different for a lot of fundamental reasons, and then also because this nice bear channel has been developing, and it would make a whole lot of sense for this thing to follow something along these lines right here. When forex moves, they trend, and they will just continue trending, you know, in a big way, specifically after major patterns are confirmed or violated. Here we've been in this pattern for so long that if we do break this down, I certainly wouldn't expect this to be support. I would expect a new real long-term, and this goes all the way out to like 2030 basically. So over the next, and I would have to do a little bit, this is drawn up pretty quickly, so this could really be anywhere from 2028 to past 2030. So take the time here with a bit of a grain of salt, but I definitely think that if we are unable to really get that sharp reaction to the upside, then this is what I would expect. And there's a couple levels. I mean, if we take out these lows right here, it's really going to be ready to move down. And even if we take out this low here for any amount of time, like that's something that I don't think has happened. Like here, we got the close below, and we don't take, maybe we took out the low for just a little bit and barely. So, notice how just taking out that high of this candle is going to be really, really tough. Didn't happen here or here. And same thing with this. It barely looks like it fell below. Let's just see. Low 1.0352, 1.034. So yeah, barely took it out and didn't spend any time there. So if we take out the low of this candle and spend any time there, it's going to really make me think this thing's ready to break down. And then if we take out the lows of 1.05, then absolutely. On the other hand, if we take out the high of this candle at 1.14, it would be a pretty darn attractive long opportunity with a target, depending on how long you like to hold on to your positions. But just notice how fast this thing can move and how big of an upside there would be, either upside or down. So it's definitely a time to be paying very close attention to the euro as far as I'm concerned. And gonna delete those so I'm not left with them for the rest of my life. Okay. USD JPY. I'm going to just zoom in here a little bit, actually quite a bit before changing charts. Trying to remember which one I prefer. Okay. So here is the US dollar versus the Japanese yen. Keep in mind the last chart was euro against USD. So if that chart was going down, it was bullish for the dollar. If it was going up, it was bearish for the dollar. Opposite is the case here. USD JPY, if this chart is going down, it's bearish for the dollar. And if this chart is going up, it is bullish for the dollar. It's basically how many Japanese yen do you need for a dollar? And we see that you're needing less and less as this chart goes down to get the same amount of USD. So this did just have a pattern confirm that gave us a target of 82.5. We get that target by measuring from here to here. And connecting that with the breakdown point. And maybe it's just slightly higher than 82.5, but we will call that good. So that is my target. On the Euro USD, there's still need to wait. We don't know if that thing is broken down or not. This could be the best buying opportunity, and if it's going to be a selling opportunity, we need to wait for a few of those lows to be taken out before really having those targets. I was just kind of drawing that out. If we do, fail to quickly make a big move to the upside, then I absolutely would be using those targets and as a prediction. Whereas it's too early, we have to wait on that chart. This one, it's not too early. We've got a pattern that's been confirmed. Not only has it been confirmed, but it has resisted a throwback and now appears to be developing a channel of its own. So it's some interesting things going on right now in the world that US dollar is losing value against Japanese yen, but looks like it may be really ready to gain a lot of value against the euro. And let's just get this out of here. Okay, so here's what I'm seeing is that, like I said before, when forex moves, it really trends. It's like one of the best trending markets that I'm aware of is forex, because there's usually like a major event that causes a long-term move, and when that happens, you will get really, really nice channels and trends, and that's whether that event be breaking down a technical pattern, whether it be something fundamental, whether it be both, that all could apply. And right here, I'm really liking the looks of this new channel that's developing just from a technical perspective. I mean, I don't like the looks of this target necessarily, but it's something that is interesting. Like there is some major things happening, and you gotta, at least I ask myself, what could be going on? And I would say that this is a pretty bearish overall picture for the overall economy. When you enter recessions, the Japanese yen has been a bit of a safe haven, sometimes even more so than the US dollar. And I know that I personally have reasons to keep some of my fiat in Japanese yen and not the euro. Okay, I don't want anything to do with the euro, but I do want to have some cash reserves, and a part of those cash reserves are Japanese yen, because there's a number of reasons I really don't want to take the time to get into, but it generally does pretty good when you are in really uncertain environments. A lot of people will look to hedge some of their USD into Japanese yen, and we notice how in this area here, like this chart reversing, front ran the kind of top of the mortgage crisis. So this is where things get a little bit spooky, kind of make hair stand up on the back of your neck a little bit. But look at how the US dollar lost like 40% of its value from August 2007 until about 2011. So as the world was falling apart and everybody's freaking out and terrified about what's going to happen, what were big money institutions and people doing? Well, they were viewing the Japanese yen as more of a safe haven than the US dollar. And that's something that happened back in here after the dot-com. Well, I'm not really sure where the dot-com top was, but again, notice how it was kind of preceded the dot-com top is when, right in here, the US dollar started doing really poorly against the Japanese yen. We'll say right here it broke down in October of '98. So it is something that is very interesting to pay attention to, especially trend lines just matter so much in forex, and when those get broken, big moves happen, and they don't happen in forex for like no reason. They generally happen for major reasons. So I am really wondering, what may be the major cause of this action here, breaking down this trend line and now providing us with a target of 82.5. That would again be about a 40% sell-off, and we can just kind of go ahead and draw in resistance. And support. Okay. So notice, like, let's see right here, we've got a bull trend line that lasts from December 04 to July 7, so about 2.5 years. Right here, we've got a bull trend line from August 16 to June 19, so like 3 years. And then what happened after we broke it down here, we fell, you know, like 40%. And then right here, it would be kind of the same move down if you started it from up here, but maybe you know, maybe the best analogy would be to actually start it right here. So definitely seeing price being stuck in a bit of a range, and it really tried to find a bottom back in here. When I say stuck in a range, I mean that's an enormous range and huge trends happening, but it's interesting to see the measured move from that symmetrical triangle is very close to this area of horizontal support. And what was I going to look at? I don't recall. Let's take yeah, check that out. So we break down the trend line, and then we bounce up and into death cross. This is like a perfect setup for me, is breaking a trend line and then throwing back and having a death cross like right in here was just perfect, and then right in here is not much different at all. And yeah, that's something that there should be a lot of resistance around 109, and that would be a very interesting place to go ahead and enter. Oh yeah, the one thing I was going to say is how hard it did try to kind of find a bit of a bottom here with what was looking a lot like a head, shoulder, inverse head and shoulders bottoming pattern that really fell apart right in here. And look at that. The monthly moving averages, how close they got to a cross and didn't occur. And when you get close to a cross and it doesn't occur, watch out. And look at this thing on the monthly. I mean, geez Louise. What did I tell you about these trends? This is from 1990. That just basically perfectly called that top. I think this is the first time I'm seeing this. Oh, wow. Could this be an enormous descending triangle? This might be the new biggest descending triangle I've ever seen. First it was ETH BTC, then it was GE, and now I think it's this. Holy cow. Can't believe I hadn't spotted this before. Okay, you guys have seen that target. We'll get that away. Look at this. And again, it looks a lot like a cup and handle or a head, shoulder, but it seems, specifically seeing that trend line breakdown, pull up and into the death cross, and then the failed golden cross with the 50 and 200 month EMAs. It doesn't seem like this is going to come to fruition, and it sure looks like this top trend line is holding. And if that is the case, we could be looking at a descending triangle that is forming over a 28-year period. That would be insane, and would want me to, and it looks like we're at a pretty darn good area for to basically keep this thing going for a lot longer. And let's see, so yeah, this is my call. I had that 82.50, so there we go. And then something like that would be absolutely fascinating. I definitely think these next 10 years or so are going to be a great time to be a currency trader, due to having some massive action on the fundamental side, and then also some massive patterns occurring on the technical side. So that is covering pretty much everything I wanted to cover. I'll go ahead and take a look at the chat, get myself a drink of water, and see if there's any good questions. How did you get USD JPY back to 1974? I will show. I always use the ICE ticker if I'm wanting long-term charts. For forex, if you type in USD JPY, you get a lot of options for different exchanges: forex.com, Alanda, FXCM. If you use ICE or ICE, you will get history back to when we left the golden standard, or at least defaulted on our obligation. We left it a long time before that. But okay, let's see here. Okay. Go watch Big Short. That is definitely a good movie. I recommend reading the book as well. Okay. I wonder if Euro JPY would tell us anything. That's a good call. I didn't think of that. Question from Barbara Evans. How you doing, Barbara? Let's see. So let's guess first. If the US dollar is bullish against the euro and bearish against Japanese yen, that means that if you are wanting to short the euro, shorting it against the Japanese yen makes a lot of sense. And that is lining up. That thing looks like it is just falling apart in a big way. Wow, that is interesting. I mean, that just looks terrible. Like it tried to turn the corner here. You got the higher low and the higher high. I wonder if it is, higher low and higher high. Tried to turn, but now it's just like lower high, lower high. So I would be paying close attention. Interesting how this trend line comes in at the psychological level of about 100. So that's what I would be watching for, is this right here. And it looks like, we're getting relatively close to the lowest prices this pair has ever seen. And if it breaks down this and creates a new low below this, whew, man, there's some stuff happening, that's for sure. That would give us like a $10 target or something like that. That would be insane. Is that right? From 170 to 90, that's like a $80 change. So that would be like 20 would be the target if we broke this down. And if it did so, it'd probably get there so fast that people would have no clue what's going on. Great question, Barbara. Glad that we took that. Okay. Trend is your friend? Absolutely. Money is your friend? Absolutely. Okay. Well, I think that this will conclude. And yep, I appreciate everybody for tuning in, for smashing the likes, for clicking the subscribe, for sharing with anybody who you think may enjoy this content. And tomorrow we'll be back at you with another live coaching session with Gabriel Harbor. So stay tuned for that. And then also have been working hard on getting some indicators developed that basically use the strategy that I put together and make it into a really clean sort of indicator. I was just going to see if I had it up. If I did, I would show it real quickly, but I want to wrap it up today. And when I say clean, it's just really simple and easy to understand, where it's just basically buy, sell, close. That's it. And it will be something that should be available very soon. Right now, the code's all looking great. I'm going through some back testing, making sure, seeing if there's a couple tweaks that need to be added, and then outside of that, do have a couple SARs being developed, and it looks like one is about ready to go as well. So hopefully in this next week, I'll be able to release one, if not both of those, and definitely stay tuned, because I am very excited to share, potentially keep an eye on silver, as it looks like it's just opened a candle in a strong way in 10 seconds. It's made that move. That's interesting. And right here, 17.5 is what I'm looking at. So okay, stop and share. Thanking everybody again, and we'll plan on seeing you guys tomorrow.